Hello and welcome to episode number 24 of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and on this week's show, we will be taking a look at the upcoming earnings report from IBM and discussing why our consensus estimates are calling for this once iconic technology brand to finally break its multi-year streak of declining revenues. Before we get into this, let's remember that IBM is a more than 100-year-old brand. The company has gone through its ups and downs and survived through many shifts in consumer trends. It has been incredibly innovative over the years, and we owe a lot of our advancements in consumer and enterprise technology to the research that IBM has done. This really cannot be understated or cannot be overstated, whichever is the right use of that phrase. However, IBM's well-documented streak, which now stretches to 22 consecutive quarters of declining revenues, comes from the perfect storm of being kind of late on a massive shift in demand and having difficulty competing with a massive amount of new competitors in the information technology business. So we could go back 22 quarters and look at how this thing all started. We could go back 15 quarters, 12 quarters, and track how the slumping revenues have changed over time. But to keep things simple for the purposes of this episode, we're actually just going to go as far back as IBM's most recent quarter, number 22 of the slumping revenue streak. And the first thing you see when you take a quick look at IBM's results from last quarter is that the company is getting quite close to snapping the streak. IBM posted Q3 revenues of $19.15 billion, which beat our consensus estimate of $18.62 billion and slipped just marginally from the $19.23 billion reported in the prior year quarter. Earnings of $3.30 per share also beat our consensus estimate and actually advanced a penny from the prior year quarter. Of course, on the earnings side of things, IBM investors know that the company tends to use nearly every accounting trick in the book to beat earnings estimates and has actually met or surpassed our consensus mark in 12 consecutive quarters. IBM is getting close to snapping its streak because of growth in key divisions. It's really been a cloud story for IBM, as has been the case for a lot of IT companies. Cloud revenue, including cloud delivered as a service, in Q3 was $4.1 billion. That was up 20% from last year. Its cognitive solutions segment brought in $4.4 billion in revenue, and that was up 4%. Its systems segment snagged about $1.72 billion in revenue, and that was up 10%. So you're looking at, in three of its kind of five key divisions, you're looking at a growth rates of 20%, 4%, and 10%. So where is this slumping revenue coming from? Why are total revenues down? Well, we've seen two categories kind of emerge as the problematic units. First up, technology services and cloud platforms, and then its global business services unit. So these units actually slumped about 3% and 2% respectively in the previous quarter. But now, we're going to look forward here because I'm thinking that this could very well be the quarter that IBM snaps the streak. It's reporting on Thursday. And in fact, our current Zach's consensus estimate for revenue is calling for total sales to hit $21.96 billion in the quarter, which would indeed represent year-over-year growth of about 0.87%. It's marginal. It's not even a 1% gain, but 0.1% gain would snap the streak and get IBM back on the right track here. Obviously, that consensus estimate doesn't tell us too much, so we need to complete the picture a bit more. And for that, we turn to our Zach's non-financial metrics consensus estimate file. If you are longtime listeners of the show or the Friday Finish Line, you have heard us use what we call the NFM estimates. These estimates, which break down key earnings report items like business segment revenues, are updated daily and based on the independent research of expert stock analysts. You can find more about them at zacks.com/non-financial-metrics. These are exclusive to zacks.com, and it is a great look at what, the analysts who spend all day, every day, looking at these companies and their operations, the stock analysts that have the power to drive share price performance, what they're thinking these kind of individual business segments are going to bring in every quarter. So I'm just going to dive straight into the two categories that we highlighted as problematic just a second ago. First, global business services. This category includes the company's consulting, global process services, and application management operations. And as of right now, analysts are expecting the company to report revenues of $4.24 billion in this unit. That's actually up from last year's mark of $4.22 billion, a marginal gain, but a gain nonetheless. Meanwhile, the other unit that slumped in the most recent quarter was that technology services category. This unit includes IBM's infrastructure services, technical support services, and integration software. Including internal revenues, our consensus estimate is calling for the company to post $9.33 billion in sales in this unit. And that's down just a little bit below 2% from the $9.52 billion reported last year. So slightly under 2% slump expected there. That's a little bit better than a 3% slump in the most recent quarter. And we're seeing estimates calling for a slight improvement in the other problematic category, which was global business services. So how is IBM going to break the streak? Well, if it happens, you will see headlines that flaunt that 20+% growth in cloud services. And of course, these cloud revenues, cognitive solutions revenues, these are the key growth catalysts for IBM and will likely be the kind of foundation of the future of the company. But breaking the streak is going to require a recovery in the company's weakest units. So a year-over-year improvement in global business services and getting things slightly back on the right track in technology services is going to help snap that streak. It's going to make sure it does not reach its Jordan number of 23. We had the 23rd episode of Tech Talk Tuesday last week. So we're kind of, I guess, haunted by the number 23 right now. But as I said, our consensus estimates are calling for IBM to break that streak before it gets to 23. That report is coming out on Thursday. It's Q4. So all in all, our current Zacks consensus estimates are calling for the company to report full year earnings of $13.79 per share and revenues of $78.58 billion. Looking ahead to next year, our current estimates are calling for earnings of $13.86 per share and revenues of $78.45 billion. So that's actually slight earnings growth and a tiny marginal revenue slump, which could very well change depending on the company's guidance this week. 22 straight quarters of declining revenue is a trend that no investor wants to see, but IBM is looking to buck that trend as soon as possible. Again, the report is out on Thursday. And again, I just want to go back to the first thing I said on the episode, which this is a 100-year-old company that has survived through many shifts in consumer trends and has really been at the core of the growth of the computing world since day one. So I don't expect this brand to completely fade into irrelevancy anytime soon. I mean, we're still talking about a company that's bringing in $78.58 billion of revenue annually. So a serious behemoth in the information technology industry. But again, Thursday, keep your eyes on that report. It's not a high-flying, flashy stock that tech growth investors are going to be highlighting. But this is the Tech Talk Tuesday, and when a behemoth like IBM reports, we're paying attention to that as well. That just about does it for us this week, guys. As a reminder, if you feel that we missed something or if you want us to cover a different story, feel free to shoot us an email at podcast@zacks.com. Make sure to check out all of our other audio content at zacks.com/podcast. Remember to subscribe and leave us a rating on Apple Podcasts if you enjoyed the show. As always, thank you for listening to the Zacks Tech Talk Tuesday podcast. We will see you next time.